Mark comes by, talk a little market. This must be salad days for you, isn't it? Isn't this an unending series of record highs for the stock market, Mark?
It's definitely been a good few months, and especially here recently, as we seem to, each successive day hit an all-time high.
But I mean, what does it turn into? I mean, I look around and I'm saying, okay, now, and I want to catch you up on this. Last week, after I got my bag of excrement from David Toscano, the House Minority Leader, he used the line, we were talking about the kind of balkanization of our workforce. We've got people earning really good salaries and people who still need assistance to pay the basic necessities on it, and too many of them. And I think you used the phrase "jobless recovery," right?
I did.
That's an oldie but a goodie, isn't it?
I mean, it hasn't really been heard since about 2005. But
why could that be?
I don't have a good reason for that. But
I have two or three of my own. But let's talk about that, because he said, well, corporate profits are way up and they're not getting invested in hiring people. And I'm thinking, well, no. Well, your employment policies are what's driving that out. Talk about corporate profits being up in that boilerplate, Mark.
Well, it is one of those things that, you do see today corporate profits at record highs, all-time highs. It seems like every quarter the S&P is hitting a new high for earnings, and individual companies are hitting record highs. And yet there is this issue of people not being employed, or companies not necessarily reinvesting that. I think there's a handful of reasons that is happening. I mean, all the economic policies, et cetera, that the government has in place that don't make it overly appealing for companies to go out and invest capital. But I think you also have this issue which I think is rarely talked about anymore. I mean, I hear it maybe once a month somebody talks about all the cash that's trapped overseas in U.S. companies, and that's a repatriation tax holiday, which I think is something that we should be talking about, and we should be thinking about, hey, there's $1 trillion of U.S. corporate cash stuck overseas that companies are not dumb. They're not going to bring the money back if they have to pay the 35% U.S. corporate tax rate. And yet, if they brought it back, there's a potential that it gets invested in the U.S. as opposed to just sitting overseas.
Well, it's definitely not getting invested. But, I mean, nobody seems to want to get that cash going, because I think, in my mind, that the Democrats would be cornered into, oh, you're just helping the greedy rich people who, hire people and go out and, make the businesses prosperous so that we can have the jobs that pay our bills.
Well, it's interesting, and I don't know whether it's that or part of me thinks, they've made so many statements about this tax benefit from employing people overseas. I mean, that's always been a huge talking point for Democrats since Obama's been president, and yet the reality is there's no tax benefit. I mean, these companies generate revenue and profits internationally. They pay all their taxes internationally, and there's a tax penalty if they want to then bring that money back into the United States. And so I think it creates a very difficult situation for them to say, oh yes, we've been trying to call this a tax break, even though it's a tax penalty, and now we have to kind of reverse course on it. And I almost feel like it's one of those things that politically they don't think they can take the hit for that, even though I don't know that many people that wouldn't think it was a positive. If there's $1 trillion overseas and we could bring it to the U.S., I don't see who would say that's a bad idea.
Well, it depends on who, if it was just coming and being given to the poor, then you could probably get some traction for it. But, it is unfortunately how the two parties have really, and Rob and I were talking about this before you got here, Mark. You mentioned, why the Democrats wouldn't want to try to do this, because it would start more employment. It would, gin up more jobs in the United States, which they are supposedly campaigning to create. And I think the same thing infects them, that stops, guys like John McCain from getting up and saying, Rand Paul is right. Instead, he's saying, hey, he's not helpful. We all went to dinner with the president. He paid. And
my friends.
So I think the same thing infects, reasonable members of the Democratic Party who would sit there and maybe run their own business, but because they're told this is the little box you've got to fit into. We don't want a job for the poor person, because that may seem like we're forcing them to work. We just want money for them.
Yeah, I think that there's a lot of truth to that, and I think one of the biggest challenges we see in Washington, and this is not a Democratic-only party. I think it's a Republican and a Democratic problem, is that they pretty much have to just toe the party line. So there's like one guy, like Obama has a plan, and that's just that's what everybody has to agree with, and you're not really allowed to deviate. And Rand Paul, and I heard you guys talking about courage earlier. I mean, that is a very courageous thing to step out and say, this is not the neocon, big government Republican stance. I mean, this is a very much a flies in the face of everything that Bush built in his anti-terror policies, but he's saying this is the right thing to do and we should be doing it. And so I do think that, it's going to take more courage from everybody to kind of say, let's just do things that are smart and that make sense for the economy, and not let's toe the party line.
So why do we still see the economic, jobless recovery while we hear that Wall Street is making more and more money? Because I fear that feeds into this class warfare that the president has built his reputation on. See, Wall Street's got this record profit. I understand that the Dow and the number that you hear on the Wall Street Journal report is just a scorecard. It's not indicative of real things. So take us inside of it, Mark. When you're building somebody's portfolio at Red Wave Investments, how do you pick and choose to say that Dow is really high, but maybe somebody wants a whole bunch of a sector that's really down? Talk about that a little bit.
Well, I think that there's a few things, and one, I think it's important to recognize that as you look at the Dow, especially the Dow, you're talking 30 of the largest companies, and a lot of people don't know that, but the Dow Jones is only 30 companies. It's 30 companies that make up this index, and then the S&P index tracks 500 of the largest U.S. companies. And more of these indices are companies generating, they're U.S. companies, but they're generating significant amounts of revenue and profit overseas. So you really can see this bifurcation between how the Dow does or how individual companies do versus how the U.S. economy is doing, because they are less and less tied every single year to the results of the U.S. economy. And I think you continue to see, and this is not a new thing, I mean, this has been going on for years, but this globalization of labor and commodity-type labor, and not to say anything negatively or positively about it, but the fact is a lot of jobs can be done other places for a lot cheaper, and companies recognize that. And the U.S. it's expensive to employ people, wages are higher, every other cost that's associated with employing people is higher here. And so this has been a multi-year, decades-long trend of using offshore labor to do various jobs. So you get the situation where companies can continue to squeeze productivity out of the global labor force while doing very well.
Doesn't the government bear some responsibility by setting labor basements, by setting labor floors that they say, oh, you can't go below this? But what if everybody else in the world, and this is the danger we run into, is I think a lot of, we talk about the anti-colonial bent of the president, but a lot of it is other people in both parties who look at other countries in the world who socialize their industries or nationalize them like Hugo and say, well, we have to somehow compete against them. So we have, to compete against them, we need to be more like them. So let's subsidize and subsidize and subsidize instead of, taking the angle of how about we just try to do it our way and see which one, roll up our sleeves and see if the free market. But we haven't had a free market with you mentioned all the regulations on labor and OSHA and all the other things. That's not a free market for labor. That's not a free market for work. That's
bringing up a few really good points. And I think, if you were to look at, and I agree with you, we've never been a true free market, laissez-faire, capitalist society, but we've been a lot closer than a lot of places. And, if you look at, say, the 60s through, 2000, early 2000, U.S. growth rates versus European growth rates, whether it's, Germany, France, whatever, basically we averaged 3+% a year. They were kind of 2+% a year. That's an enormous difference in economic growth and productivity over a generation of time. And yet, for whatever reason, to me, that seems pretty black and white evidence as one way is definitely superior, and yet we seem to be drifting like you said. And I think to compete we have to get more like them.
Well, but what happened, I think, is September 11th. I think September 11th led to where Rand Paul had to stand up yesterday, and it also leads to our economic choices. We were in a bubble, but the housing bubble had just burst. The president desperately was trying to keep the economy from crashing down and causing major problems. And remember all the other problems that were going on just before September 11th. We had Al Gore lost basically on the whole "it's the economy, stupid" bit. That, and he didn't run with Bill Clinton, but because he just couldn't. So Al Gore took the hit for the fact that the .com bubble burst, the housing bubble, first one burst. And so now September 11th happens, and the president is trying to figure out a way to keep the economy from crashing and starting a depression that would really have come apart and caused some big problems after the terrorist attack, because they would have connected, one to the other. So I think he inserted an awful lot of Keynesian policies then in an effort to just keep the economy, looking like the American economy, while people aren't freaking out that we're so weak or so challenged economically and globally.
Well, and that's a very good point as well. And you look back through the Bush administration, there were multiple Keynesian-style stimulus measures that passed, both on the front end and the back end. And I think he was probably the shift, even though he was a Republican, he was sort of that shift away from, let's let the markets kind of do what they do, invest capital, allocate capital, and see what happens. Away from that Ronald Reagan, government's not the solution, government is the problem, into how can government do this, and this, and how can we kind of pick what we think is the right answer, and I
wouldn't want to have traded places with him. I mean, they had attacked American soil. I mean, it was the first time since Pearl Harbor that an American president had to figure out what to do after an attack had been launched against the United States on American soil. He just took this route of saying we need to get back to normalcy pretty quickly. I remember that discussion. Can we get back to normal? When is it okay to be normal again? And all those things that we discussed. November, December, January of 2001. Saying when is it okay to go to Christmas, and when is it okay to go to the movies again, and all those quote normal things, which really are just they're bells and whistles, trappings on the American experience tree, not the substance of it.
Right, and I think you look at that period, this 13-year or 12-year period since then, and you've largely seen the Federal Reserve just inflating multiple different bubbles around the economy. Right, I mean they tell you where to invest capital. They make it cheap, and we see where we are. I'm
going to ask you that question in a second. Let me see who's on the line at 434-964-1075. Who's this?
This is Andy.
Hi, Andy. What's your question?
Well, not really a question so much as I'm just considering, what has changed in the economy, let's say, since the later part of the 1980s, and what has perhaps been a major source of job dislocation. And technology, innovation. Most companies they don't hire people just to be good guys. They're hiring people because they need them. And when you can get equipment such as computers, and software, and all the other things that go along with that, and knock out whole segments of your workforce, such as bookkeepers, file clerks, stenographers, all of the people who used to sit and answer the telephones, all these jobs that used to be, sort of in the middle, yeah. You call them middle class jobs.
Well, I agree with you. Let me get Mark's response to that. Thanks, Andy. Because I remember when the computer boom was starting, and everyone said, "Oh, the computers are going to give us all this free time." And I was the bad guy that raised my hand and said, yeah, and who's going to pay us for that?
Right.
The free time is all great, as Rob experienced in Starbucks, people wandering around saying, but that technology also gives you the opportunity to be your own entrepreneur, where 30 years ago you would have had to have rented a storefront and done all these other things in order to hang out a shingle.
Well, it's a really interesting point, and I think I've even made this comment on this show before. You look at a company like Microsoft, which generated enormous value for itself and enormous value throughout the economy, but it's probably the single biggest cause of job destruction of any company in the world, right? I mean, how many jobs did Microsoft destroy because Excel and Word and PowerPoint could all of a sudden...
I was talking to my dad the other day. His career, he's retired, but his career went from like the 1960s through the 2000s, roughly 2000. And he said the biggest change he saw was there's no such thing as a secretary anymore.
Right.
They used to have banks of secretaries, and they don't exist anymore because, you don't need them to type a letter for you. You've got email on Microsoft Word. You don't need them to make photocopies. You don't, there's all these things you don't need them to do anymore. Since the only person, they've all been replaced by one IT guy.
Exactly.
Well, but I mean, then you look at the marketplace of these concierge office centers that has a little space, and then you can go in and work there. So I mean, there's creative destruction in this.
Exactly. Well, which is a very positive thing to have that creative destruction. But one of the things that I've been thinking about over the last few months that I think is interesting from a macro kind of economic picture is the difference in starting businesses today versus 20, 30 years ago, right? And today it takes almost no capital. So if you think about people's view of the world and how they think about how capital should be treated and allocated politically within our economy, it is vastly different because today you can be Mark Zuckerberg and start a multi-billion-dollar business with a few $1,000s, and that's
Right.
it. And you never have to invest millions and millions of dollars in hard assets, hard equipment, machinery, etc. to build your economy. And I think we are seeing how that is playing out in the habits or the thinking patterns of people in society.
So what are you putting people in right now, Mark? What kind of things are you saying that are good open-ended kind of growth places for people who need to build a portfolio through RedWave?
There's still, I've talked about healthcare in here before, although, to be honest with you, the last few days I've been doing a little bit more profit taking. I mean, we've had a really good run in the stock market. We're at all-time highs. I've talked about big lots on here a number of times. I finally closed out that position fully a couple days ago. And it sort of feels like a good place to me to be saying, we've had a good run. Let's take a little time out. Let's look. So I'm a little bit more cash right now than I have been, and kind of